In less than 5 years, Sam Bankman-Fried went from buying his first Bitcoin to becoming a crypto billionaire. Many, many times over, and he's just 30 years old. Sam will tell you he's always wanted to get rich, but not for the reasons you might expect. All that money, he plans to give most of it away to charity. Do you have a sense of how much you've given away so far?
It's a bit north of 100 million so far this year.
You're pretty low-key in terms of when we think about billionaires. You don't drive a Lambo?
No, I do not.
Is there anything you do splurge on?
The place I live was intended to be an incredibly nice apartment for 4 people, and we've turned it into an apartment for 10 people, but it's nice, although a little cramped.
He lives with roommates, one of them a golden doodle named Gopher. That is Sam's Toyota Corolla in the parking lot of FTX headquarters in the Bahamas. It's one of the largest and fastest growing crypto exchanges in the world, and Sam is the CEO. Some estimates that say $1 billion in revenue last year.
Those numbers are reasonable. You know, they're the right ballpark.
NFL star Tom Brady and supermodel Gisele Bundchen are investors in the company.
You just need FTX.
The Miami Heat play in the FTX arena, and you might remember that Super Bowl ad the company did with Larry David earlier this year.
It's FTX. It's a safe and easy way to get into crypto.
Yeah, I don't think so.
So why should you care about a floppy-haired, vegan, fidget-spinning crypto billionaire who occasionally sleeps on a beanbag chair? During the so-called crypto winter, the 30-year-old CEO has been referred to as crypto's white knight, offering multiple loans for hundreds of millions of dollars to backstop struggling companies as the plummeting prices of digital currencies destabilize the market. You said FTX has a responsibility to seriously consider stepping in at the time to save companies. Why did you have that sense of responsibility?
It's going to be important that the industry is able to get through this in one piece. It's not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers.
He's also been called the next Warren Buffett.
To the extent there is a parallel recently, especially in this crash, looking at which assets are in a place where they pretty badly need capital. And, finding places where hopefully I can simultaneously make good investments and help backstop them and their customers in the ecosystem.
I'm sitting down with Sam Bankman-Fried to learn more about his unique investing philosophy, how he made his billions, and how he sees the future of crypto. Yeah, well, great to see you in person. Thanks for having us here.
Of course, thanks for coming.
So I read somewhere you said you always wanted to get rich, but not for the reasons you might expect. Can you explain that?
So it was always is a strong statement, but I would say, in college, I realized I didn't want to go into academia, and I started to get involved in effective altruism, which is basically a movement looking at, if you want to have positive impact on the world, how do you maximize that? Or at least do the best that you can. Think about it not in terms of do at least 1 unit of good, but instead of how many units of good can you do, given what resources you have at your disposal. And so I sort of went to a lot of charities that I thought were doing really great work, and basically just asked them what can I do? What would be the thing that I could do that would help you guys be as impactful as possible? And they all said they wanted my money and not my time. And, if I was able to have a high-paying job, I would be able to donate to them, enough that they could hire a lot of people who were better than I was at growing out their actual operations. And that would help them more than, me working directly for them. And so that was the hypothesis. And I, basically thought about, okay, given where I am as a physics major at MIT, I should probably think about where I might be able to, donate as much as possible. And obviously, finance and quant trading came to mind. It served as a classic career path for disaffected physicists. And so, applied to work at Jane Street.
So effective altruism is basically making as much money as you can so that you can give as much money as possible away.
That's what it's meant for me, but for other people, right, it might mean actually going to work directly for the organizations if they're able to be really outstanding at, either working for existing great charities or starting, new philanthropic efforts. But yeah, for me in particular, what it has meant is, making as much as I can so I can donate as much as I can to what hopefully are some of the world's most efficient and effective, charities.
Do you have a sense of how much you've given away so far?
Yeah, it's some definitional issues. I think especially you look at we've made a few for-profit investments in companies that we think are going to do good for the world. And so I'm gonna, if you put those aside for a second and you look just at the things that are sort of unambiguously, philanthropy, I think it's a bit north of 100 million so far this year. And probably that's gonna ramp up a bit over the next couple of years.
Do you have a sense of how much of your fortune you'd be willing to give away in the end?
I mean, in the end, I think almost all of it, right? Like in the end, the way I think about it basically is something like, well, I don't know, maybe like 1% of it or something, I'll, end up using on myself. But if I do well, and obviously if I underperform, then these numbers don't have to change. But if I do well, I think that should be kind of plenty for me.
You didn't own any Bitcoin 5 years ago, is that true?
5 years ago, yeah. That is about 5 years ago that I traded my first Bitcoin.
What got you into it?
So I just left Jane Street and didn't actually know what I was going to do with the rest of my life. Like I'd left just basically, I loved it there, but on the premise that there were just a ton of things that I could try, and probably one of them was going to end up exciting, even if I didn't know which. And I basically just pulled up CoinMarketCap and just looked at the Bitcoin page on it, the little markets tab, and it was super interesting because first of all, it told me roughly what the volume is, where the big venues were, but also it lists out the price on each exchange, and today that's almost an antiquated part of the product. Like I forget that column exists because it's just reading out 23,731 12 times in a row, but back then it was all over the place, right? And you'd see 10-20% differences between different venues, and then a few that are off by 60% or something. And I basically looked at it and said, if that's correct, there's an arbitrage. If that data is right, there's a trade to do. And so I just tried to create accounts and do it.
So as a quant trader, your mind immediately went to that arbitrage opportunity.
Yeah, that's right.
And Alameda, so at the time you started trading
Yep.
Bitcoin and seeing these arbitrage opportunities, that was your own money. When did you go and decide, oh, I'm actually going to launch a firm around this?
So pretty early on, I would say a month in, we sort of decided it was worth trying. And basically, we just tried to do a lot of arbitrage opportunities. I'd say 90% of the trades that we tried to do, we failed to do for one reason or another. The other 10% were still exciting and good enough to make it compelling. But when you look at what it takes to do an arbitrage in crypto, especially circa 2017, 2018, right? Let's even just take one of the easiest cases you could think of, which is Bitcoin versus dollars on Coinbase versus Bitcoin dollars on Bitstamp, right? Let's say Bitcoin's trading at $10,000 on one, $11,000 on the other. What are the pieces that you need to put together to do that trade? Well, you need capital, right? You need some funds to do this with. You need an account on Coinbase. You need an account on Bitstamp. You need withdrawal limits, rate limits, things like that on each of the two platforms, right? Then you go, well, how'd you get money to Coinbase in the first place? You need a bank account. And that bank account needs to be able to be willing to wire to Coinbase and get wires from Bitstamp in significant size each day, right? You need to build dev connections to each one of the platforms that you can actually execute this, right? That's 9 different pieces that go into doing a Bitcoin arbitrage on 2 US exchanges. 9 different pieces of infrastructure, none of which have to do with recognizing or doing the trade.
So you were looking to sort of simplify that process.
Yeah, and ideally in the end, what you want from a trader's perspective is a button on the keyboard that you can click, and if you click it, it sends the order, right? And then if you want to transfer funds, you click a button and it transfers the funds.
You mentioned at one point in an interview that Alameda made $1 million a day every weekday. Can you explain how that happened?
So there was this brief period in January of 2018, and that was certainly a local maximum for Alameda. And basically what happened was, going back to sort of the examples of arbitrage, huge inflows really everywhere in crypto, but Japan and Korea, which were 2 places that saw particularly large buyers of digital assets, especially relative to the liquidity provided in those areas. And so what we saw for a multi-month period was elevated prices in most of Asia compared to the United States, because basically people kept buying and buying and buying in Asia, in Japan in this case, and that drove prices up to a premium. There's an arbitrage in theory to do, and it was about a 10% arbitrage, where you could buy Bitcoins in America, you could send them to Japan and sell them for Japanese yen, turn the yen into dollars, wire it back to the United States, and in theory have made maybe 9% post fees. And in theory, if you had, $15 million of capital or so, some of it was always going to be stuck in one place or another, but high level, you could make $1 million every cycle of that arbitrage. And, how long was a cycle? Why couldn't you just do this every 30 minutes? I mean, that's how long it would take to do the trades and send on the blockchain. The answer is wire transfers, right? One step of this is you end up with capital in Japan, in Japanese yen, and you have to turn into dollars in America. And that took like 12 hours or so. So it took a day each time to cycle. And, you could only do it on weekdays because banks were only open on weekdays. And, for most of January 2018, that's what we were doing was doing Japan-US crypto arbitrage.
So essentially flipping Bitcoin from one market at a lower price, selling it at a higher price?
That's right. Those opportunities, they still exist, but they're a lot smaller today.
Were you surprised at the time? Were you ever saying to yourself, I can't believe how much money we're making off of one trade?
Yes and no. It was, on the one hand, intellectually, I could say or lay it out and be like, well, if this happened, and then this happened, and then this happened, and this happened, then you can make this amount of money. And we're making exactly that amount. Like it was, in one sense, it was just exactly what you'd predict intellectually, but viscerally, it surprised me every day. Like viscerally, every day, I'd wake up and be like, holy shit, it's still there.
By 2021, you're on the billionaires list, more than $22 billion in terms of net worth.
Yep.
What was it like to make your first $1 billion?
It's one of these things where like, the real thing I think came a few months earlier. Like there's a time at which formally something has happened, but the writing is often on the wall before then. And I think it was like this sort of time when we started up FTX, and the first traders, there were people we knew. Like we sort of reach out to them like, hey, we built an exchange. Would you like to try it? And they're like, I guess, sure, as a favor, right? I think the point that like I started to feel like, oh wow, this might actually be big, is when we started to get registrations, and it's like, all right, like all hands meeting. Who was it who introduced this new trader to the platform? Like, whose uncle is this? And the answer is no one's. Like the answer is none of us had ever heard of or met the person, and they found out about FTX organically. And when that started happening, and we just started getting people signing up for the platform that we had never met before, that was when I started to feel like this might actually be real.
You felt like you made it at that point?
I felt like there was a pretty decent chance, yeah.
And so as far as creating FTX, why create an exchange when there were already so many big global players out there?
Yeah, I mean, the basic answer is that we didn't think any of them had nailed it. Like, and that was, I think that surprised me. It surprised me that we didn't feel like they nailed it in early 2018. And it surprised me in late 2018 that they still hadn't nailed it. That like, the things that we had noticed, many of them were not fixed. And I think eventually I just started to feel like, I'm not sure it's getting there. Like, I think we actually might be able to launch an exchange well before many of the existing venues would have sort of incorporated the principles that we would be launching with.
How is it the case that you guys are so much better off than your peers? If Coinbase, for example, said trading volume was down 30%, how are you guys immune from this?
I don't think we're immune from it, but I think there's two differences. One is just like we put a lot of work into trying to really grow out our footprint over the last year, which is counteracting a lot of it. And some of that's just continually releasing new features, new products, new ways for people to use the platform. Part of that is getting regulated. Like we now have licensed offerings for our product suite in most of the world, including Japan, European Union, Australia, and others. And then I think part of it is also just we have a less retail heavy platform, and retail tends to be more market sentiment dependent.
Who is your average customer, if not retail?
Most of our volume comes from customers trading at least $100,000 per day of volume. And so these are high volume, highly engaged users. And it's sort of everything from like someone in the crypto ecosystem to a small quant trading firm, a family office, to day traders, to larger quant trading firms, to institutions. It spans a lot of different sort of demographics and countries and types of players, but they're all generally fairly sophisticated, fairly engaged, and fairly large volume.
You said your company's really operating everywhere. Yep. What geography is the most important and driving the most revenue? There's
no geography that's more than 10% or so of it. And so really the answer is if you just take the world GDP weighted, except for the United States, Iran, and North Korea, and I guess like a few other restricted jurisdictions, that's a pretty decent proxy for it. Like if you want to know, what fraction of our volume comes from Japan, right? I don't know, like 6% would be a reasonable place to start as a guess. I think that's roughly its fraction of world GDP.
FTX in general has just seen explosive growth. I've seen
Yep.
some estimates that say $1 billion in revenue last year.
Yep.
Where's most of the revenue coming from, and how
Yep.
much of that was some of the acquisitions you did?
Those numbers are reasonable. They're the right ballpark. Best guess, we may see a similar ballpark this year. Obviously, depends on what happens over the latter half of this year. We've generally seen sort of market share growth between last year and this year counteract the market decline. And where did that growth come from? It's the first thing to say is our core economics, and I'm sort of glossing over a lot of details here, but this is like correct for 80-ish% of the revenue, which is that it's people trading on our order books with an average fee rate of about 2 basis points, roughly. And this is very different than what you get if you look at the economics of a more consumer-facing platform. It's way lower fee, higher volume. We have $10, $15 billion of daily trading volume on the platform.
Still at this point?
Yeah. And obviously, it's different on different days. On weekends, it'll be a bit less. But what that means is most of our revenue is coming from high volume users. It's not to say it's all HFT firms, because it's not. It's a wide variety of market participants, but most of the volume and revenue are coming from the market participants, which for one reason or another are trading significant size. And we've been working on building out our consumer product, especially with the recent stocks push and other things. And as for the acquisitions, the core way that we think about acquisitions depends on the acquisition. And I wouldn't say there are any which have today transformed the business, but there are a lot that have played a really important role in helping to build out parts of it. And there are some that may transform the business going forward, right? Like, I think one of the biggest things, obviously, that we've been working on is getting FTX US derivatives up and running in the United States. And, optimistic that we will be able to get there.
You've been referred to as crypto's white knight in some instances, really coming in with these bailout and rescue packages. Why take that approach?
We only had a few days to make some of these decisions. What we basically came to believe was the following. The first was that, if possible, it would be extremely valuable to the ecosystem to backstop some of these places. First of all, it's just backstopping customers and making sure they're protected. But second of all, stopping contagion from spreading through the ecosystem, right? Stopping it from being the case that anyone who transitively did business with any chain of people who did business with one of the troubled assets themselves became troubled. And then the secondary goal was maybe there are good trades to do. Maybe there's an investment or acquisition that can be done at, terms that we'd be excited about, given the sort of need for capital right now. But that was usually not the standard we were able to hold ourselves to. In practice, the standard was, do we feel okay about this from a financial perspective? Like, does this look at least mediocre? Like not a huge loss in expectation, maybe a gain in expectation, hopefully, maybe not, was sort of the bar that something had to cross in order for us to feel comfortable, intervening there. And often we just weren't sure. Like, you look at a lot of these cases, they had 4 days before they were going to file bankruptcy. And so we had 4 days to do all of the diligence we could on the company, learn everything about it, understand the industry, their business, their customers, understand how we thought things were going to unfold, and then make a judgment call and wire money. I think the Voyager case is sort of an interesting one there. What we ended up doing was extending a sort of two-piece line of credit. And the first was $70 million. And that $70 million was money they could just draw on immediately, no strings attached. And we knew we might lose that. Then there's a larger line of credit, which would eventually have potentially plugged our best guess at the time as to what the complete hole was, but which had conditions on it. If there's just an immediate run on the bank here and the business is just going belly up and there's nothing we can do to actually save this, like, we don't want to just keep going through it. We very well may lose that $70 million. I don't know if we're seeing it again. And so be it. Like, we understood that risk going in.
Do you still have enough cash if you needed to do another bailout?
Yeah. Yeah, we did, and we try to keep that on hand. Like we try not to empty the coffer, so to speak. We had a couple billion going into this, and it lines up roughly with the amount that we'd raised, over the last year, and on top of that, we had been profitable.
So billion-ish to deploy?
Yeah, and again, you get to definitional issues here of how much do we really feel comfortable deploying? Saying that there's another ballpark billion, that is sort of, completely unencumbered, certainly will get you within a factor of two, certainly, if the right answer.
You said FTX has a responsibility to seriously consider stepping into the time to save companies. Why did you have that sense of responsibility?
It's not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything, and so from a longer term perspective, it's just that was what was important for the ecosystem, is what was important for customers, and it was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
I want to talk about future of FTX and stock trading for a second. So you have about a 7.6% stake in Robinhood. There
Yep.
are reports that FTX has been looking at eventually acquiring Robinhood. Why do that when FTX is also launching stock trading?
So our default path here is, we'll just build everything out, right? And we're going to try and grow our business, as much as we can. I do think there are potential synergies between us and a bunch of other companies. And I think specifically, when you look at companies that have, done, frankly, an amazing job at building out a brand and way better than we have. And, have built out that real presence of mind in, in the West, in consumers, and have done a great job of building a consumer experience, have built up that confidence. I think that, there are ways, I think, to work collaboratively with companies that could be really mutually beneficial and really complementary. And that can span a lot of different ways of interacting, right? Like we acquired Blockfolio, for example, and we've partnered with BlockFi and others. There are other cases where there are white label agreements. There are cases where there's ways that we can help service each other. In general, we're excited to have conversations with companies that we think there might be collaborative benefits in working with. And we can think about 100 companies that sort of would potentially fit that in. Now, certainly our partnerships team has been a little bit overworked working through a lot of those, but we don't have any active acquisition talks with most of these.
Long-term vision for FTX, say 5-10 years down the road, where do you see this company?
One piece of this is being a global platform where people can access liquidity in a sophisticated, powerful way. One piece of this is being fully licensed. And, we think we are already by far the most licensed crypto venue and maybe the most licensed exchange overall, depending on how you count globally. We are licensed in dozens of jurisdictions separately and have spent a huge amount of effort on building that out. But there is more to go, especially in the West. And then the other side of this is trying to build out a really beautiful, powerful, intuitive consumer experience that hopefully helps to make managing your finances easier and more straightforward. Hopefully helps to mean that you don't need to worry about the clunkiness of payments, of settlement, and that things just work.
What about your own legacy, Sam? What impact would you want to leave on the world long term?
I don't give a shit about my legacy. I care about the impact that I have, but it's not the thing I try to remind myself is at the end of the day, what matters is the impact I have, not whether anyone knows about that impact. And so, I mean, I still don't know what I'm going to ultimately think are the most important causes. I have guesses right now, but I want to keep my mind open to new evidence. Right now, things I'm focusing the most on is single thing is probably pandemic prevention. And so if I'd say what's the legacy of sort of what I'm doing right now, it would be that I help support efforts that made it such that the next time that a pathogen was released, it did not become a global pandemic. But there are a lot of other important things in the world, and I want to work on whichever of those I can have the most impact through.